Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live in YouTube here. Let's jump right into the markets here. Gold trading last 1722, roughly down about 370. Silver trading around 23.34, down up about 7.5 cents. Copper was up 5 cents, around 4.34. GDLC is trading at around 41.30. I recommend to take some profits here on GDLC if you're long GDLC. Take some profits here and just let the market come down to adjust some of this overbought conditions. There's gaps below the market, as you can see, down into that 31 and change area approximately. So I'm not sure the market's going to come down there, but we are trading at the sell levels here. So we're going to book some profits on GDLC. GBTC is in a little bit of a corrective process here. It would be great to buy it back at around 36 to re-enter the long side of the market. And the gold market is trading around the average price here, about 1725. The extreme level below that average is 1684 to 1637. We are in a bearish price momentum, but a close above 1725 would negate this bearishness and will activate actually the targets above 1772. As I keep telling you, my traders here in Discord, trading around the average price can be very choppy sometimes. And I choose to trade to take the signals at the highest probabilities, and that's essentially when the market is trading at the buy one level or at the sell one level in terms of a trade. What I want to take a look at is the little bigger picture that we have in the gold market, because once again, I think the gold market is at this point in an area where we could be looking at a potentially reversion unfolding. We are in an area that's called accumulation of supply, and as when we came down yesterday to this lows that we saw here, it pretty much coincided with a 61.8% retracement from the low that we saw in March 20th to the August high that we saw. And this, according to Fibonacci retracements, accomplishes a very important target that is called the golden ratio. That is 61.8% retracement of the previous pattern. And this attack that we're looking at the gold market here is pretty much on the face of what appears to be a shift in the mentality of people for the time being away from traditional risk assets, basically, like gold and silver. And we have seen, obviously, a tremendous increase in Bitcoin. Bitcoin futures have traded with a high of 46,800 just recently, a couple of days, from a low of 37,300. And one of the things that is happening here is basically that I believe this sector, this digital asset, is becoming legitimized and accepted as a class asset, as a digital asset in the investment community. You have to recognize the amount of wealth and money that has gone into Bitcoin. It's producing phenomenal returns over the last 10 years, unlike any other asset class. And so we're looking at, obviously now, the government beginning to consider regulation, which is really positive for the market. It's the acceptance of the market as a legitimate financial product, except that it's a digital asset, but it will have regulations. With the interest in digital currencies here, we have seen a tremendous amount of interest and development in other digital currencies. And for my own self, for my own profile, so to speak, I want to focus on Bitcoin, as I believe Bitcoin has the potential to challenge the US dollar as the world's reserve currency. As we're beginning to see Bitcoin being accepted in large financial institutions, Fortune 500 companies, financial institutions, Morgan Stanley. These are institutions that were completely against this digital asset. But the tremendous amount of money that has been going into the sector is essentially legitimizing the fact that people need or are looking for this kind of investment product, as opposed to traditional investments like gold and silver. I think the idea that gold and silver are not decentralized products have taken away the luster, you might say, of what gold and silver really represents in the monetary system. And so the speculation of the market has gone into this digital asset environment. Billions, trillions of dollars have gone into the sector. If you put it all together, it's a staggering amount of investment capital that is looking for yield, that is looking for a hedge against the US dollar as the underlying currency in all assets in the United States. And I think it's pretty clear, or it should be, that you can see what's happening here basically, or what's happened to the market in the last year or so, ever since the pandemic. Because of the pandemic and the amount of stimulus that is inevitably will come to the market once you go through the political issues, is staggering. And if we're looking at an increase on assets of 30% on the average, what it really represents is that the underlying currency has declined by 30%. Or essentially, it's the other side of the coin. In the past, this relationship would have resulted in gold being at 40,000 if we did not have a digital asset being created, such as Bitcoin. So it appears to me, when I look back at the 1987 Fortune magazine had a cover of the New World Order with the New World Currency, which was called Bitcoin. So is Bitcoin going to be a replacement for the US dollar? I'm not sure. Let's come back here to the markets here for a minute. Down 680 on the gold market, down trading below the average price here. We seem to be getting some pressure in gold. Silver is holding steady. My objective in the direction of my conversation in summary, basically, is that this stimulus, monetary policies, fiscal policies are going to stimulate an explosive inflationary cycle. Inevitably, it's being reflected already in just about every other asset except for gold and silver, which are part of the centralized monetary system. Let me share that this potentially, once we take out the speculation and we get to the extreme levels of speculation here, and the sentiment of the market becomes extremely negative at these levels here, potentially could be what the market needs to put the bottom in the market. For the last few months, a couple of months or so, I've been suggesting basically that regardless of any short squeeze sentiment out there, any bullish sentiment, you put on the internet and you take a look at there's a massive amount of pundits out there now that are dictating or calling, pontificating the price of metals to be exploding, the Reddits of the world, Wall Street Silvers of the world, and yet the physical market is doing completely the opposite, as you can see. And I believe, just being around the block a few times, one of the reasons why the market did not go or would not go is when everybody wants it to go. Markets never go when the majority of speculation is looking for one direction. So the first thing that a market has to do, is wipe out all that sentiment. And that's what it's doing in gold right now. And when that sentiment becomes the most bearish, and we were looking at the indicators, is potentially when the buying, the solid buying will come in. And, I don't know when that's going to be, except that the VCPMI indicator tells me exactly where we are in the market in relation to the probabilities of the market. Right now, we're trading at the average price, basically around the average price, which is the mean. It's a 50-50 standard deviation. So it could go either way. And either the market, in order for me to get excited about a trade, recommending or managing it, it would be the market either coming down to 1684 and activating a buy trigger, or closing above 1725 and activating a bullish price momentum all the way up to 1772 as the initial target. 1812, 1813 is the second target. What the market needs to do is to trade above 1810 as quickly as possible. And get back into the long-term cycles that essentially needs to reactivate the bullish uptrend from a probability model. And we're looking at, that's a yearly average of 1810. We're trading the shorter term time frames, and we're looking at the daily chart, the daily structure that we trade. Let's take a look at silver. That seems to be holding pretty well here. Is pretty much in the same position as gold market, trading below the average price. So these are the indicators that I use to watch the market and kind of see how the momentum shifts in between the average price. which is what I don't trade the average price. Um, and I don't recommend it's 50-50 standard deviation. But, again, it's following the momentum, the energy of the market. So um, self-directed traders can make the decisions. Actually, this level here on a more aggressive basis, when the signals are generated from the average price, usually it's a momentum play by aggressive momentum traders that are looking for the momentum to break, to unfold. But you got to be aware that if you trade around the average price here, you can get chopped up pretty good. You're going to get chopped up back and forth until the market resolves the momentum and accomplishes the target up or down. And that's what's called mean reversion trading. The reversion to the mean principle is basically that if the price trades above the average, it activates a bullish price momentum with a target, with a very specific target in place. When the target is completed, the reversion to the mean principle, if the signal is activated, should take this market back down to the mean, basically. Or if it trades below the mean, it should gravitate towards the mean above. Okay, we're looking at some buying coming in here. The daily average is 1725, and if it does trade above the average, then this is going to negate the supply or the bearishness, the previous bearishness, and we're going to be getting, the first time it touches it, a neutral signal, and then when it trades above it, it activates the bullish price momentum. Let's watch the market for a little bit here and see some buying come in here, hopefully above 1825. Let's go back to the TradeStation platform here. Silver is moving nicely, up 14 cents. So this is what I mean when I talk about the reversion to the mean, or trading around the average price can get very choppy. Even though the signal was activated, you can see the energy or the momentum of the market moves the opposite direction. And so it's choppy back and forth around the average until the momentum picks up, and you can see all of a sudden these green bars develop, and the price just moves nicely towards the target. I continue to share this with my traders in my Discord room, my private trading room, that I know it's difficult. It's been difficult for most traders in gold, uh, to see the price come down here, especially on the face of what's happening to the U.S. dollar. So, but I've been around for a little while, and I can tell you this, that the longer the price is manipulated down here, the market forces, when it adjusts to its natural mean, will revert and make the adjustment on that basis, and the move could be just a phenomenal move that would catch everybody by surprise, unexpected. When you least expect it, this thing will turn around and skyrocket. I expect that once we get this speculation out of the market, gold mining shares are going to be one of the most exciting sectors in the investment community. And you want to buy this and accumulate when nobody wants it. Just make sure that you don't overdo it, that you don't go on margin. Just maintain a position that you can maintain drawdowns, and continue to hold, because I sincerely believe that we're going to come in one day and gold is going to be up $100 and silver is going to be up $2. Who knows? But the market energy is extremely oversold, compressed, artificially compressed, very much almost like a pressure cooker, particularly for the silver market. I did pick up some physical silver yesterday and will continue to take physical delivery on any corrections in the market. The premiums have come down reasonably from 40%. I think they're down to about 20%. So it's a reasonable time to be cashing in on some cash and physical to take delivery. Continue to hold on to your core position, your core belief. Don't let the market take you out, psych you out. This is probably, as you look back, one of the, I would say, best opportunities to buy this year. Possibly second to March. Thank you again, everybody, for allowing me to share this information with you, and continue to hold your long position. Hold on. Stay strong. Be long. We'll talk to you soon. Take care.